Hello, Ghost Traders. This is your market update, October 27th, 2024, with Scott C. Today, we're going to check on what the market has done, maybe why it's done it, and what we can expect in the week ahead. Let's start by taking a look at what the market did last week, and we've got the SPY chart up in front of us. We're going to use this as a proxy for the entire market, and you see that there's a nice, good uptrend, higher highs, higher lows. Yet, if you look really closely at my cursor, this last week, there was a little bit of a pullback going on here. So let's try to figure out why it's pulling back, and let's look at how far it actually pulled back. I'm going to zoom in on this area right here. Let's just capture the last week's activity. And we're going to start with Monday, October 21st. And this is really where it had kind of topped out and started its move down just a bit last week. And one thing I want to say about Monday is we'd had a nice run up the prior week. The previous Friday, we had a little bit of what we call a bearish harami. The body of this candle could fit in the body of the previous day's candle, and after an upward move, that predicts a little bit of bearish weather coming up. And so we'd already been overextended just a bit. So on Monday, we saw just a little bit of a down day. You had bond yields that had surged globally, and I think the reason for that is because there's just a little bit of pre-election jitters about potential inflationary policies. But you had a little bit of good news. I mean, you had some stocks like Nvidia and SMCI that actually had a pretty good day. And I'll show you what I mean. Let's take a look at Nvidia. Let's zoom in and take a look at October 21st, and it was up. So not everything looked horrible on Monday. In fact, it was just a little bit of a down day. Moving on to Tuesday, October 22nd, you can see that the market was up slightly. Earlier in the day, we had a little bit of a sell-off, but buying pressure stepped in and actually put the market up slightly. And again, I think what we're seeing on Tuesday's action, nobody could pinpoint any definite reason. It had sold off early and then kind of recovered, but I think there were some pre-election jitters. You had an upcoming October jobs report. You had some earnings releases. Some big companies were coming out with earnings. And then, of course, after hitting record levels last week, you've got market participants that are reducing exposure before facing some of these upcoming challenges. Now, moving on to Wednesday, this was kind of our big down day for the week. The NASDAQ actually tumbled 1.6%, which broke its 5-day positive streak. The Dow went down about 1%, and the S&P 500, which is what we're on right here, went down just about 1%. I'm going to show you the VIX, which is our measurement of fear in the market. And on Wednesday, the VIX briefly topped above 20. So fear was kind of hitting a high. A couple of things that were noteworthy on Wednesday is that defensive plays led the way, with REITs and utilities outperforming. Now, REITs are real estate investment trusts, and these are considered defensive market plays. You also had the Magnificent Seven tech giants, which all declined before Tesla's earnings release, which was happening later. One thing that was really kind of unusual about Wednesday is that there was unusually light trading volume, which points to quantitative trading as the primary driver rather than broad selling pressure. A lot of market watchers started to say that at this point on Wednesday, all eyes have turned to next week's October jobs report, which is likely to influence the Fed's November rate decision. And then Friday, we actually started out pretty high and came down through the day on the S&P 500. You had the Magnificent Seven tech giants actually boosted the S&P 500, but most of the stocks in this index actually declined as you had some rising bond yields which were pressuring the major sectors. Let's take a look at the Dow, and I'm going to use the DIA. That's the ETF that follows the Dow Jones. And the Dow itself, you can see much more pronounced downward move this week. It had lost 1, 2, 3, 4, 5 days in a row. And we're going to look at the NASDAQ real quick for the week. And that's QQQ. It's the ETF that follows the NASDAQ. We actually had the NASDAQ, which had its 7th consecutive weekly gain. That's the longest winning streak it's had this year. Now overall, I wish I could tell you exactly why the market's doing what it's doing, but sometimes you got all these big institutional traders, you got these algorithms, whatnot, just trading, just doing what they do. I think there's a little bit of pre-election jitters happening right now overall in the market. So sometimes you can see a little bit extra volatility. So this is what the market did last week. Let's take a look forward and what we can expect this coming week. And we're going to go to the Forex Factory calendar. And as you take a look through this calendar, Monday, you'll see that there's really nothing major that should move the market tomorrow. But on Tuesday, you got some jobs data, some employment data. Wednesday also, if you go down here, you've got some GDP, but you've got the non-farm employment change. If you go in here, you can take a look at this, and it'll say that job creation is an important leading indicator of consumer spending, which accounts for the majority of overall economic activity. Scroll down a little further, and that you see that there's some more job data, unemployment claims on Thursday. And as I said earlier, a lot of this jobs data is what the market is kind of looking at because it's going to influence the Fed interest rate decisions in their upcoming meeting in November. And then finally, Friday, more unemployment, more jobs data. So really, that's what we're looking at right now. You might still see some pre-election volatility in the market. Now, one thing I'd like to touch on, finally, is I've been following Bitcoin and cryptocurrencies quite closely, and you can see that overall, this IBIT, this is the iShares Bitcoin ETF. If you want exposure to Bitcoin through the stock market, this is probably the best ticker to be trading. They are not optionable yet, but they have been approved to do options. So at some point, you will be able to do options on IBIT. It will be the best one to be doing options on. We've been using BITO up until now to do options, but IBIT is going to be better. And you can see that overall, it had been sideways for a while. We had the Bitcoin halving, but look what's starting to happen. Your moving averages are starting to slope back up. We're starting to see an uptrend again, higher highs and higher lows. Let's see what happens if Bitcoin can start breaking up above some all-time highs. It's going to look really good, and we might be just a little bit early right now, but it's starting to look positive here. So go out there, be safe in the market, trade your trades. When you get the right signals, go ahead and pounce, but use good money management. And as always, go out there and haunt the markets.